Ladies and gentlemen, welcome back to the channel. Tesla stock soared today, and it's likely to continue over the next couple of weeks. And I'll tell you why in today's episode. Now, what we're going to do is we're going to look at what happened today in the markets. I'm going to give you a brief rundown of your major events and why they are significant for Tesla and the broader markets. We're going to look at the economic data coming out tomorrow. And why it probably doesn't matter much for stocks, but it could, so we'll cover it. And there was a lot of talk on CNBC today about Tesla, so there's a clipper or two that I want to share with you as well. Ladies and gentlemen, if you like to make money, and if you only like to make money, if you're here because you want to make money, hit that like button, subscribe to the channel, check out that link down below in the description of today's episode. If you guys want to see the stocks that we are investing in that I believe are big long-term winners that are really under the radar AI stocks right now, okay? They're, especially in this crash, some of the valuations on these small cap AI companies have gotten crazy cheap. And we are exploiting that and taking advantage of that, okay? I know exploit sounds like a bad word, but that's probably the best way to put it. How we are taking advantage of this market. So let's go ahead and get started with what happened today. It's actually pretty simple. Compared to like Wednesday of last week or even Thursday, you were pricing in roughly a 30% chance of a rate cut December 10th. The BLS had delayed the data that we were supposed to get before the December 10th Fed meeting, and there's basically been data delay after data delay after data delay. And after this week, you enter the Fed's blackout period. You're not going to hear from Fed officials anymore. So Wall Street was saying, okay, we don't have any economic data that's going to change the Fed's minds. We're not getting a rate cut. Boom. Then you had Fed Williams that came out on Friday, said, yep, I support a rate cut. And then kind of wait and see what happens next year. Then today you had Fed Waller that came out and said, boom, I support a rate cut for December. Fed Moran supports a rate cut. Fed Bowman, although we haven't heard from her in a while, most likely supports a rate cut as well. So the Fed officials that support a rate cut seem to be growing, okay? That's great from a liquidity perspective. We've really been dealing with a crypto issue for a while in markets where margin calls have led into margin calls. And it's been a pretty nasty situation overall for crypto that's led into a pretty large issue for the stock market as well. Well, now it looks like we're going to get liquidity via a rate cut and the Fed actually adding to their balance sheet pretty soon. So that's been a big part of this market over the past couple of days. Crypto stabilizing and a rate cut December 10th. We've also had really good earnings from Walmart. MasterCard, one of their senior executives, actually went on CNBC today and said the consumer is spending. They're doing great. Okay, mix that again. Walmart earnings, Nvidia earnings were really good. The jobs report for September was really good. And there's not a lot to be super fearful about right now. So that's kind of what happened today and what's happened recently. We've cleared up a lot of uncertainty, and the economy seems to be doing better than feared, which ultimately, rate cut, no rate cut, who gives a crap? You just want to see the economy doing well. You want to see the economy avoiding a recession. That's ultimately what matters, okay? That's what matters most for stocks, okay? Recession is the worst thing that could happen for your portfolio if you want to see gains, at least in the near term. So that's what's happened recently. Now, today was really a culmination of all of those things. But I think you're heading here into a year-end rally, okay, a chase, if you will. 80% of hedge funds underperform the S&P. And I would imagine most hedge funds are underperforming yet again this year. So, with all of these risk catalysts that have solved themselves, now it looks like we're going to be getting a rate cut. There's not a lot at all holding this market back at this point. Okay, and think about it like this: if the S&P is up 10% this year, I don't know what the exact figure is at this moment, but if the S&P is up 10% this year and a hedge fund is up 5%, they don't want to end this year underperforming the S&P. It's a really good way to lose clients. Okay, so you get these year-end rallies where Wall Street is underpositioned, end of the year, holiday shopping season. Like, these things tend to happen. People tend to be nervous about the holiday shopping season, and then it tends to be or look better than expected, and then everyone piles back in. Okay, it's pretty typical. Tends to happen almost every year. So the chase has begun. Now, not all areas are going to go up equally. A stock like Tesla is really going to outperform here. Because why? AI, the emerging growth that Tesla is going to experience next year in AI. Melius Research, I think is how you pronounce it, came out today and said Tesla is a must-own stock because of their AI prospects, Robotaxi and Optimus, etc. Not to mention Elon Musk now being contracted to be Tesla's CEO for 10 years. His compensation is based on your compensation. And if you do well in your investment in Tesla. The stars are aligning for Tesla stock to have quite a rally into the end of the year. Now, you need to get above some of these technical levels like the 20-day moving average, 100-day or 50-day moving average at around $434 per share. Call it $300 or $435 per share. Once you get above that, I think you're looking at a very aggressive rally into the 500s. I think Wall Street's just going to get more bullish on Tesla as the weeks go by. Now, before we get into some of these clips on, Tesla stock and what was said today, we do have some economic data coming out tomorrow. But I don't think it's going to change much from the Fed's perspective. Okay? I don't think the ADP employment change on a weekly basis, the data we get tomorrow, whether it beats or misses, is going to change the probabilities for a Fed rate cut. Fed officials are making up their minds now and telling you, okay, if they weren't comfortable cutting rates, no matter what the data looked like tomorrow, they wouldn't be coming out and confirming that. Okay. Now, PPI month over month for September is going to be coming out tomorrow morning as well, expecting 0.3%. Keep in mind this data is for September. Okay. Retail sales month over month for September, expected at 0.4%. Now, what's more important? Retail sales for, 2 months ago, or what Walmart just said, what MasterCard's executive said on CNBC today. Clearly, it's not retail sales. Okay, so while retail sales, some might react to it, it's not going to change a whole lot. Now, core PPI month over month is expected at 0.3%. Again, I don't think it's going to change much, right? It's not going to change anything for what the Fed is doing with rates. Maybe like the catalyst is over with, so, maybe you get a rally just because of that, right? Kind of, uncertainty gets lifted, stocks move higher. But I don't really see it as a negative catalyst for markets tomorrow. You have the S&P Case-Shiller home price year over year, again for September. House price index month over month and year over year, again for September. Business inventories month over month for August. CB consumer confidence for November. This is one of the most up-to-date data sets that we will get tomorrow, and it's a survey. So, is it really going to move markets? Probably not. Pending home sales month over month and year over year for October. Okay, Richmond Fed Manufacturing Index and Richmond Fed Services Index. Okay, so a couple smaller things there. You have a 5-year bond auction, and that's it. On Wednesday, durable goods orders month over month, and Chicago PMI. I believe Wednesday is a short day, a half day. I believe stocks will close at 1 p.m. I might be wrong on that. Just if I remember, I think the day before Thanksgiving is a half day. but maybe not. Y'all confirm that in the comment section for me, just for the sake of everyone watching this video, if I'm wrong. But again, Chicago PMIs, durable goods orders, couple things, but pretty outdated metrics nonetheless. This durable goods orders report, month over month, for September. I don't think that's going to move the needle much. Initial jobless claims will be important Wednesday, because that is for November 22nd, which was literally 2 days ago. Expecting around 224,000. Last week was 220,000. So you're not seeing much of an issue in the labor market, or it's not worsening, which is good. Thursday markets will be closed, obviously Thanksgiving, and then Friday you don't have much either. Literally nothing. So with the lineup of catalysts that we have, earnings. Today and after hours, Symbotic, Zooms, Semtech. Tomorrow, pre-market, Alibaba, Neo, Abercrombie & Fitch, Analog Devices, Kohl's, Best Buy, Pony AI, Burlington. And after hours tomorrow, Dell, CleanSpark, Workday, Zscaler, Autodesk, Ambarella, PagerDuty, Urban Outfitters, NetApp. And then Wednesday pre-market, you have John Deere and Li Auto. I just don't see the downside catalyst, right? I don't think we have any catalyst this week that are enough to offset the massive positives that we're dealing with, right? Again, good Walmart earnings, good Nvidia earnings. Even today, China Trump comments sounded really good. They had a phone call and nothing but positive headlines came out of that. Okay, mixed with this year-end chase, the fact that markets are now convinced we're going to have a rate cut, there's not a whole lot holding markets back here. Not a whole lot holding Tesla back. I actually said yesterday, I think we could have a 20% rally this week, even though it's a short week. You're up almost 8% today. Okay? Having a really strong day. And I think this likely continues throughout this week. Again, markets are still so bearish. They're still so poorly positioned for the upside that a chase is only inevitable at this point, in my opinion. CNN Fear and Greed Index is at 14 still. Out of 100, it's at 14. Extreme fear. AI Investor Sentiment Survey shows 12% more bears than bulls. 24% of investors that are neutral. That's pretty damn bad. And only 39% of stocks trading above their 50-day moving average. That's pretty bad. Okay? So just to get back to neutral from here causes an aggressive rally. Now, Tesla stock, I think once you break above that $435 level into December, you're going to see a pretty aggressive rally into the 500s. It's going to happen quickly, in my opinion. Now, with that said, I do want to share one clip with you from CNBC. This clip is only about 3 minutes long. It's from Clockwise Capital's CEO that says China has never been the reason we own Tesla. So take a listen.
Share that Tesla has in China. So these sales decline there at this point, is this still a big deal? The fact that they're not really able to generate a lot of sales and they're facing a lot of rising domestic competition?
Yes. So China's never been the reason we own Tesla, or I think, should own Tesla. I mean, the writing was always on the wall with China for Tesla because of the fact that they just simply cannot compete on price to the degree that the local Chinese manufacturers can. And at the end of the day, they were the first mover there and they benefited from it and got a lot of revenue from it. But at the end of the day, the reason that you want to own Tesla is for the optionality outside of that business. But ultimately, we do think that it will continue to be a declining aspect of contribution for the overall business over time.
All right. By the way, looking at some Chinese EV stocks right now, moving higher or the closed higher. We're showing them on the board right now. Elon Musk putting out kind of a nugget yesterday that Tesla has its own advanced AI chip engineering team. How big of a deal is that for the automaker?
Yeah, it's interesting. If they can continue to innovate on that front, everything that they're doing and the data that they're collecting is still second to none. I say it's really tough for them to compete on price overseas, but as far as their chips capabilities and the data collection and then the automation that comes behind that, is still second to none, and they have a tremendous lead from a technological standpoint versus virtually every other company in the space, and or definitely every other company in the space. So, we think that they will continue to differentiate in best ways possible as it relates to their technological prowess.
All right. When we're talking about them developing their own chips, is there any scenario where they don't need the NVIDIA chips? I mean, the NVIDIA chips aren't very important to their business. Is there any possibility, I should say, for them to supplant that supplier and kind of put their own chips in their own cars?
I don't think anything like that in the near future. I think over time, this is going to be a conversation not limited to Tesla, with all the hyperscalers for that matter. Will they be developing their own chips in a way that, I guess, diminishes the need for NVIDIA GPUs and whatnot? So that is a question, I think, for later. But for the time being, I think NVIDIA, as you saw from last week's results, is in no point of being disrupted.
I think generally for Tesla stock, you're about to see Wall Street flip in a big way. It's going to go from everyone doubting Tesla over the past year or two to, oh my gosh, Elon Musk is the CEO. They're rolling out robotaxi and Optimus is coming in the coming quarters. Again, I think Melius research is right today. Tesla is a must own, and Wall Street's going to get behind that view as well over the coming weeks. I think Tesla is going to be a $500 stock. And the fact of the matter is, a lot of Wall Street doesn't care about stocks until they actually rally, until they're actually doing well. That's why Wall Street, they just tend to buy the stocks that everyone else already bought a long time ago, right? They tend to chase things and fuel things. And I think even broadly speaking, again, that's what's coming for the markets as well. So hit that like button, subscribe to the channel if you have not done so already. Let me know your thoughts on Tesla over the next couple of weeks, and where you think Tesla stock is going to close this year on December 31st. If you guys want to come join the trading community, check that link out down below in the description of today's episode as well. Have a great rest of your day, and I will see you in the next one.